Good morning and welcome to the Saxo Bank morning call for this Thursday, December 6th. We have some very ugly markets overnight. The approximate trigger, I'm not 100% sure it's this, but it looks like, if we look at the chart here, the Huawei CFO arrested in Canada for extradition to the US. This looks like this could be the trigger for the very ugly action overnight. China loudly complaining about this move. Apparently the CFO accused of having been dealing with selling equipment to Iran and violating therefore those US sanctions. And we're seeing the Hang Seng off on the degree of almost 3% overnight here. And if we look at the S&P futures, they actually opened in such a bad state that the CME, where the E-mini futures trade, said it had to do brief, I think it was 10-second trading halts to initially get the market going. That's where those spike lows you see on this chart were posted in the opening bar there. We've bounced a little bit more than that on some breaking China news, and I'll get to that in a moment. If we could take you through the FX reaction, we've seen the Japanese yen performing its sort of old-fashioned or old style safe haven, if you will. You see the bounce here from those lows, somewhat related, I think, to some noise from the Chinese Commerce Ministry on positive developments or hopes, at least for the U.S. trade relationship. And again, or not again, but I mentioned this yesterday in a webinar I held. The recording for that should be available this morning on home.saxo. Talking about the yen is really firing inconsistently on this risk-off safe haven. I think part of that is the Chinese currency and hopes that China maintains the line there, and we're seeing stability in Asia on that, and stability in what you would consider the more risky emerging markets. I'll actually get to that in a couple of slides forward from here. But just I think the dollar-yen or the yen situation very odd here, and I think that we don't really know if this safe haven aspect of it has faded somewhat until we get or don't get. But the big test is if we get a Chinese currency move to the downside and a bit more volatility coming back into emerging markets. I think that's where we might see the yen volatility picking up again. But back to our charts, you see the Aussie yen chart here, that 83 break above 83, quite thoroughly rejected. And Aussie dollar, something similar there around that 73 plus level that I've drawn on the chart here. It gapped higher after the G20, and then the concern that this G20 summit, so-called, between Xi and Trump may not develop into what was hoped. In any case, on a technical basis, this looks like a pretty strong rejection here of the upside, and would take some considerable doing to overcome. I think we'd need to see something very promising developing in the U.S.-China relationship. Dollar Canada shaken from a very different direction. We had the Bank of Canada out yesterday taking a much more cautious turn in its outlook for the Canadian economy, upping the risk level on global developments, and even noting some weakness in the Canadian economy. And you're seeing that January rate hike almost priced out of the market. There was basically priced in at around 75% to see a 25 basis point rate hike at the January meeting that would have taken the rate to 2%. That's now about a 25% odds. So you've seen the odds for that dropping a lot. Canada rushing to the downside. You saw the chart there, dollar Canada above that 134 level. This will be the highest in quite some time. And the next chart level is just ahead of 138. Now, I mentioned earlier about the Chinese currency providing some sense of gravity. It doesn't appear the market thinks that China is about to move to devalue its currency or to allow it to float, and I assume if it does float, very much to the downside, because if the market was expecting that, you'd expect some front running out there, especially in emerging markets in Asia, for example, selling off those currencies in anticipation of a Chinese move. And we're not seeing that, and we're seeing the market taking China at its at face value of what the market is doing. If we look at the weekly index here on the Chinese, this is the official Chinese basket for how it likes to see the Chinese renminbi tracked. You can see, and this is a weekly chart, and there's a weekly sort of close every week for this level. Very little volatility there. I really do think that's providing this anchor for emerging market currencies that are not sort of being allowed to move and adjust to what have been some alarming fundamentals. I'm going to skip two slides forward here to our risk indicator. And it's probably even worse. Some of these data points are based on daily closes, so the very live sort of market action today is only partially indicated or shown in this indicator. Very ugly levels, traditionally very, very negative for risk appetite in the currency world and in EMs as well. So I do think China is providing that anchor for now. and indicating where I think the risks lie if we do see a bigger move in the Chinese currency. Now, onto that breaking news just in the minutes before I came in to shoot this morning call. We have the Chinese Commerce Ministry's Gao out saying some pretty positive things on China's intent with the U.S. Trade relationship. They see strong momentum despite the rising protectionism. I'll just read these for you. Export front loading. This is an interesting issue because there's been this idea that because of the scheduled tariffs rising to 25% on January 1st, that was the original schedule before this trade breakthrough happened, or at least this 90-day trade negotiation window, that there could be significant front loading to avoid those higher tariffs. And that will be very interesting for the data as we roll into the new year. But back to our points here. Export front loading happening, but it's not dominant. China and the U.S. have reached high level of consensus. And here we see for the first time China specifically mentioning the 90 days that the White House mentioned in the wake of that weekend talk between Xi and Trump. And China will also work on intellectual property rights, market access, and the trade balance. And the ultimate joint goal is to remove all new tariffs. All sounds great. To me, the most interesting thing was that the immediate market reaction was very muted. So we're seeing a pretty heavy thumb on the market here, pretty negative vibe. I showed you that S&P chart earlier in the program, and we're getting very close suddenly to the lows for the cycle. So I think it's hats on, and being very careful out there is the theme of the day. In terms of economic counter, I really feel like the market is all about headlines and animal spirits here, but we do have our events coming up today. Including the Australia's RBA out to the DeBell speaking this morning. Could be interesting. We're quite negative on Aussie if nothing comes out of this U.S.-China deal or the trade negotiations. And all of the data is supposed to be released yesterday. That was not because the U.S. markets were closed in memorial of former President Bush. We have the ADP employment change, the trade balance, the weekly jobless claims, and the biggest one, what I've put in red here, the ISM non-manufacturing. More noise on Canada as well, with the Bank of Canada's Polis out delivering the economic progress report, and the big PMI out of Canada as well. And then later we have the OPEC meeting where there's talk of production cuts to get ahead of this massive decline in energy. And the big highlight economic data-wise will be that average hourly earnings figure tomorrow. But again, with so much sort of energy in these markets afoot, and actually so much being priced out of the forward yield expectations from the Fed, and the U.S. Treasuries very much on the rise, yields down. I'm not so sure we get a big reaction to that when the market is so distracted with other issues. So stay on your toes, be very careful out there, and we'll see how things look tomorrow with our next edition of the Saxo Bank Morning Call. Thanks for joining.